Revision Test 2, Question 3. A. Briefly explain any 3 advantages and disadvantages of forming a partnership. Alright, so I've got the answer here, so I'll take you through it. So, 3 advantages. 1. Skills and resources are pooled. Right? In the partnership, you have a few partners, so each partner has his own skills and resources. So therefore, when you have a group of partners come together to work on a business, then you have a pool of skills and resources, and that is an advantage. And the second advantage is forming a partnership is relatively easy compared with forming a Sundram Bharat. Number 3. Advantage number 3, tax will be based on individuals. Now, why is this an advantage? It's always easier to understand if we compare a partnership with a Sundram Bharat or a Bharat. Let's take a Sundram Bharat for example. Let's say a Sundram Bharat's profit is taxed at 24%, but the profits that are shared among the partners, they are taxed on the partners as individuals. And the tax rates applicable to individuals are lower than the tax rate applied to, say, a Sundram Bharat or a Bharat. So let me repeat. Take a Sundram Bharat, for instance. The tax rate on a Sundram Bharat's profit is, say, 24%. But in the partnership's profit is not taxed on the partnership, but instead the profits are shared among the partners, the individual partners. So each partner is taxed as an individual, not as a corporate entity, not as a business entity, but as an individual. And the tax rates used to tax individuals are lower compared with the corporate tax rate used to tax companies like Sundram Bharat or Bharat. And that's why tax based on individuals is an advantage in partnership. Disadvantages: all partners need to share the debts. We've, I think, come across an example like this in one of the tutorial questions. One partner went out to enter into a contract on behalf of the partnership, and in the end the contract turned bad and the partnership got into debts. So in a case like that, it is that particular partner's fault to get the partnership into trouble, but all the partners have to share the debts, have to be responsible for the debts. Now, it may seem a bit unfair, but that is the way it is with partnership. So that is a disadvantage of partnership. The second disadvantage is that the partner's liability is unlimited. Okay, I've got an explanation here to explain what unlimited liability is. Unlimited liability means that the business owner or owners are personally responsible for all of the debts of the business, no matter what the value. That means if the partnership got into debts, it doesn't matter how much the debt is, the partners have to be responsible, have to pay the debts. So the debts could be so high that if the partners could not afford to pay the debts, then they have to declare bankrupt. Right. But if you are a shareholder in a Bharat or a Sundram Bharat, and if the company, the Sundram Bharat or Bharat, got into debts, then the lenders can sue the company, the corporate entity, the Sundram Bharat or the Bharat. The lenders cannot sue you, the shareholder. Let's say you invested 10,000 ringgit in the shares of a Sundram Bharat. If that Sundram Bharat goes bankrupt, the maximum amount of money that you lose is the 10,000 ringgit that you've invested in the company, and therefore your liability is limited. In this example, your liability is limited to 10,000 ringgit only. But in the partnership, there is no such limit. When the partnership got into trouble, and if they are sued, and if they are liable, then whatever the amount of the liability that the partners have to pay, then the partners have to pay. There is no limit. So it could be quite risky. The third disadvantage is that the continuance of the business is not indefinite. meaning it cannot go on forever. The business cannot continue forever. Why? Because when the partners die, the partnership dies, unless some of the surviving partners bring in new partners. Right? Otherwise, the business cannot go on forever. So that is another disadvantage. Okay. Part B. Give any 3 reasons for the dissolution of partnership. So 3 possible reasons for dissolution of partnership, meaning 3 reasons for dissolving a partnership. 1. The partnership is no longer profitable and there is no reason to carry on the business. Yes, when the partners got together to run a partnership, to run a business, if the business is not profitable, then of course it is a good reason to close down the partnership, to dissolve the partnership. All right. There's no point of carrying on the business if the business is making losses. Another reason is that disagreements between partners over the conduct of the business. So when the partners cannot agree among themselves how the business should be run, and they just can't get on together as business partners, then the partnership should be dissolved. Number 3, there could be other factors why a partnership is dissolved, such as ill health or old age. Okay, so part C. Discuss any 3 reasons for payment of goodwill in a partnership. So I've listed 5 reasons here. You can choose any 3 reasons. Right. 3 reasons for payment of goodwill in a partnership. 1. The business has a large number of customers. Now basically these 5 reasons talk about what a goodwill is. Right. A goodwill is an asset. A goodwill in a partnership is an asset of the partnership, but this asset very often is intangible. For instance, number 1, the business has a large number of customers. Yes, okay, this one you can see them, it's visible, you can see that it's got a lot of customers, but it's difficult to put a value on it, right? That's why it is not normally recorded on the financial statements, on the balance sheet. Do you remember that when you do accounting concepts, you've got this monetary accounting concept, monetary measurement, meaning that what are recorded, everything that's recorded in the financial statements has to be in monetary terms, has to be measured in ringgit or in currencies. But when a partnership has a large number of customers, it is an asset, it is an advantage. But generally speaking, people don't put a value on that, and therefore it is not recorded on the balance sheet. Nonetheless, even though it is not recorded on the balance sheet, it is a valuable asset, and it is called goodwill. So when the company wants to pay goodwill to a partnership, then the company would have, or the partnership would have to put a value on the goodwill, and then they make payment for that goodwill amount to the partners. And reasons for payment of goodwill in a partnership, one of the reasons is that, well, the business is valuable because the business has a large number of customers. The other possible reason is that the business has a good reputation. So when the business has a good reputation, the business is valuable. Right? Third possible reason is that the business is situated in a good location. A good location is also valuable to a business. Fourth, the business had good contacts with suppliers. So good networking with suppliers, good contacts. So whenever the business wants to source some supplies, they can find what they want easily, and if they have good contacts, a good relationship with the suppliers, then they may even be able to get good prices. Number 5, the business has experience, efficient, and The business has experienced, efficient, and reliable employees. So we often hear people talk about human assets. So these are human assets. So they are valuable to the business. And therefore, these are the 5 possible reasons why payment of goodwill is made in a partnership. So you can choose any 3 to answer this question. Part D, we are required to prepare the partner's capital account and the partner's current account for the year ended 31st March 2020. Alright, I have pasted or copied the outline of the T accounts. Alright, and let's read the question. Kent, Lim and Mike are partners sharing profits or losses in the ratio of 1 to 2 to 1. They started the business on 1st April 2016 with a capital contribution of 24,000 ringgit, 36,000 ringgit and 48,000 ringgit respectively. The current account balances as at 1st April 2019 were as follows. Okay, drawings made during the year ended 31st March 2020 were as follows. Net profit for the year ended 31st March 2020 was 161,600 ringgit. Okay, so 31st March 2020 is the year end. Okay, so the capital account balance, opening balances are 24,000, 36,000 and 48,000 ringgit respectively. So let's fill in the blanks. 24,000 to 24,000, 36,000 and 48,000. Alright. The current account balances as at 1st April 2019 were as follows. So these are the opening balances. Well, it doesn't tell us these balances are debit or credit balances. Well, this is an error. There's an error in the question. So these current account balances, the opening balances in the current account are credit balances. All these 3 balances are credit balances. Alright, so let's fill in the blank. 18,000 ringgit for Kent, 3,000 ringgit for Lim, and 1,500 for Mike. So I suppose last year when they were doing this question during the final exam, the lecturer must have made an announcement to correct this error. Okay. Now, drawings made during the year ended 31st March 2020 were as follows. During the year, Kent, Lim, Mike each took some cash out of the partnership. So when they took out the cash, what were the double entries? Well, the double entries were credit bank account, debit the partner's current account. Alright, so we debit the partner's current account with drawings. So say bank drawings. It is 9600 12,000 and 14,400. Okay. And then the net profit for the year ended 31st March 2020 was 161,600. So we share the net profit in this ratio 1 to 2 to 1. Profits are recorded on the credit side of a T account. So when the profit is shared among the partners, each partner receives some amount of this net profit, and therefore each share is credited to the current account under each partner's column. Right. So profit sharing, share of profits. So the profits are shared in the ratio 1 to 2 to 1. 1 plus 2 plus 1 equals 4. So it means that they divide this 161,600 ringgit net profit into 4 equal portions. Kent takes 1 portion out of 4, and Lim takes 2 portions out of 4, and Mike takes 1 portion out of 4. So we just do the workings here. So for Kent, it is 1 out of 4 multiplied by 161,600 And for Lim, it is 2 out of 4 multiplied by 161,600. And for Mike, it is same as Kent, 1 out of 4 multiplied by 161,600. And this is 1 divided by 4 multiplied by 161,600. 404,400. And same for Mike, 1 out of 4 multiplied by 161,600. And for Lim, it is 2 out of equals 2 out of 4 multiplied by 161,600. Alright, so in the exam we should do a quick test. We should add up these three figures to make sure that the total comes to 161,600. Okay, now the credit totals are more than the debit totals, and therefore we are going to have balances brought down on the credit side of the current account. So carry it down at the year end, which is 31st March 2020. It is 58400 minus 9600, and this equals 83800 minus 12,000, and this equals to 41900 minus 14,400. So balance brought down at the next day after the previous closing date, which is 1st April 2020, which is the first date of the new accounting year. So these are balances brought down, and there are no transactions in the capital account, so we are just going to close the capital account and carry the balances brought down. So this is very simple and very boring. Carry it down at 31st March 2020. It's this one. So balances brought down at the first day, the next day after the previous closing date, which is 1st April 2020, which is also the first day of the new accounting year. So there we are. We've completed question 3 of revision test number 2.